Let's get more on oil. We did get oil inventory data today. We are joined by Bill O'Grady, Chief Market Strategist at Confluence Investment Management. Bill, it's great to see you. First off, could you touch on the perhaps odd movement in oil? OPEC is accelerating, in theory, production increases, but oil is up all the same.
Pretty underwhelming is the way I would characterize it. The president is, after making some pretty harsh statements about the de facto leader of Saudi Arabia, is traveling there, in effect to try to beg for more oil. And all he gets is a couple 100,000 barrels a day, with Russia perhaps down about 1 million. So the 600,000 is still a shortage. I think the market was fearing that we were going to see a much larger increase. And when it didn't happen, you turned really quickly. I think your point when you started the show is the right one. There is growing concern that OPEC just doesn't have the capacity. And, there's a famous book written about, 15 years ago now, maybe longer, by Matt Simmons, arguing that the Saudis didn't have the capacity they said they did. And at the time he wrote it, but that probably wasn't accurate. But it may be accurate now. And the fact that we got this very modest increase with really high prices suggests to me that we may actually have that as a problem.
What is the problem in countries such as Nigeria, for example? Did they let their oil and gas facilities rust, or did they neglect them during the plunge in oil in the pandemic, for example?
That's a big part of it. The industry has been struggling to invest now for a while. After the collapse in prices during the pandemic. And the reputation, especially in the United States, the industry got as a consumer of capital. Investors are now demanding, a lot of capital discipline. There was a survey done by the Federal Reserve Bank of Dallas that of all the issues that oil companies had in increasing production, the number one they all complained about was investor demands for capital conservation and market discipline. And so that ripples through the entire industry. There's great caution there. In addition, we're hearing reports that it's getting harder and harder to get employees. All the way up the line, from the fairly low-skilled workers to the engineers. There was a report in the media this week that younger people are really having a hard time going into the energy industry because of the concerns about climate change. And so it's just an industry that is really facing significant constraints to boost output.
It's interesting, Bill. Yeah, thanks for reminding me about that book. I think the one you meant was Twilight in the Desert by Matthew Simmons.
Yes, that's correct. Sorry about that.
Yeah, no, I couldn't remember it either. I just had to Google it. And he argued that a relentless long-term decrease in Saudi production is coming. And I believe that one came out in 2006.
Yeah, that's about right.
Talk to us about the U.S. inventory numbers now. Not sure if you've even had a chance to check them out. Sorry, go ahead.
Go ahead. I actually hadn't, so if you could inform me, I can talk about it.
Thanks. I'll just give you the top of the top here. Crude oil inventories in the U.S. market down 5 million barrels. So it sounds like a pretty big decline there.
Yeah, that is. The market was looking for around 3. I was looking for 4, and that's even more than I was expecting. So without getting into the details, to have that kind of a draw when you're releasing oil out of strategic reserve is quite notable. Now, we are seeing, refinery runs have been elevated compared to their 5-year average for good reason. The refining margins are really fabulous. And we're also seeing a lot more U.S. exports, which again, this is something we promised the Europeans. So it looks like effectively what we are doing is using our strategic reserve to supply extra refining demand and European consumption as well.
You guys are exporting a lot of crude to the world market. Bloomberg noting that in the latest week, U.S. crude exports hit their highest since March of 2020, before the oil market was upended by the pandemic.
Yeah, not at all surprised. And this is such a huge shift compared to most of my career. We actually didn't allow much exporting of crude until the Obama administration. So this is quite a big deal, and it's necessary for the world. Unfortunately, it's not helping U.S. consumers a whole lot, and that is. One of the key things I think to remember is the Strategic Reserve Program set up by the OECD was designed to discourage hoarding. And I'm not entirely sure that that's how it's working out in practice.
Right. So it was there to dispel fears of an actual shortage.
Mm-hmm. Well, and again, you're seeing this in the grain markets. Malaysia came out just today and banned poultry exports because they want to make sure they'll have enough for their own people. But it's because of rising grain prices, and this is what you tend to see occur in commodity crises, is that hoarding occurs. We saw that in the 70s with oil, and the idea is that, well, let's create the strategic reserve so no one will have to fear the inability to get crude. What I think we are seeing is that as we move the crude out of the strategic reserves, they're just simply being hoarded by other countries.
It's interesting, Bill. There's talk of potential rationing. Now, you guys back in the 70s in America, I just heard about this, had rationing of petroleum, and truckers apparently back then got ticked off and they were blocking your highways in protests.
I'm old enough to remember the gas lines. A lot of states had caps on gasoline prices. And so what you found were widespread shortages, which then encouraged everyone to top off their tanks on a regular basis. And the truckers did the same thing. I mean, the problem that you have is that this is painful, these price increases. And the political class is trying to react to that by figuring out how to allocate the pain. And there is a huge temptation to try to restrict prices. Now, the problem with doing that is you thwart the price signal. So consumers don't conserve and producers don't make more. And, it's cruel to say that you kind of have to let this work through the system, but in the long run, that's what you end up having to do.